Well, good evening, everyone, and welcome to the Brian Crombie Radio Hour on Saga 960. And a gentleman that I had interviewed, I think about a year and a half ago, about his investment bank, just got a major cover story and was described as the world leading most promising investment bank in 2020, the first major decentralized investment bank. And I thought it would be interesting in this time of market turmoil and markets down, and we're all working remotely and wondering what's going to happen in the future, to reach out to David Weild, who runs this company, and find out a little bit more about what he's all about, what the company is all about, and why he's won this accolade. And just to tell you a little bit about David Weild, he is known for being the former vice chairman of NASDAQ and the head of investment banking and equity capital markets at Prudential Securities. And he is credited as the individual that got the Jobs Act passed in Washington. The father of the Jobs Act, in fact, was something that he was described at. And we're going to talk a little bit about the Jobs Act because it really laid the foundation for crowdfunding in the United States. David, welcome to the show. How are you, sir?
I'm terrific. Thank you, Brian. There's one thing I would correct you. You said it was that it was world's leading investment banks or most promising investment banks in 2020. That's actually 2022.
2022. I apologize. Yeah. Just right now, recently.
Yeah. Just this is actually that article apparently got released just over this weekend, so it's hot off the press.
And they described that you're doing this, running this this decentralized investment bank by being dispersed, independent, with proven professionals that collaborate remotely to deliver better results. Tell me a little bit about what your investment bank does and how it does it and why it is so different.
Well, we kind of understood that, from our work on the Jobs Act, that there'd been a collapse and consolidation in many of the major middle market investment banks in the country. And so we postulated that there were going to be a lot of people that needed to associate with platforms, partly because I was just getting so many calls from people for help. There was a lot of ageism on Wall Street. People left bigger firms, they were rationalizing their businesses. We kind of peeled the onion a little bit, found that there could be as many as 5,000 investment bankers sprung loose in a particular year. And so
5,000.
Yeah, no, it can be like when you, in the wake of things like the financial crisis of 2008, that was kind of the number that we sort of observed. But in a normal year, it'd be over 1,000. And so we looked at it and we realized that the industry was a lot bigger in terms of numbers of professionals than we thought, probably 185,000 or so globally, maybe more than half of them were in the United States, writ large, including institutional equity salespeople, things that support the investment banking business. So we said, look, and this is before COVID, I'll mind you, in late 2016, 2017, when my board said we could go in this direction. And we saw that there was a need for people that were acting as independent contractors and trying to hang out their own shingle, and they weren't being particularly effective because, as I like to say, investment banking is a team sport, and you need to collaborate with people. You need to find that expert in energy or mining or healthcare services or life sciences and collaborate with them. You need salespeople to support what you're doing. And so these little boutique investment banks don't work very well. So we said, you got to do it at scale, and, you can't take on the fixed costs. So we're going to start with independent contractors and just have them work from home. And that was before COVID, and it was working pretty well. And then, but I think some people thought we were a little crazy, and then it got bigger. And then during COVID, I think all of a sudden people thought we were brilliant. And because we didn't miss a beat, the business accelerated. We made the Inc. 5,000 fastest growing private companies in the country. And some of the core things that we thought would happen, we went from 0% of people collaborating with people they met because of the platform to 50% of the deals are now collaboration and growing. And so it's gratifying. And then plus it's given us even bigger platform, I think, to get back to doing public policy, social impact work, because we are now supporting professionals in 24 states in the United States and 4 countries, including the United States, including a little bit in Canada. We're actually registered in 3 provinces in Canada to do institutional business now.
Awesome. And I understand that business is so good that you've done equal to 2021 in the first 6 months of 2022. Is that right?
Exceeded it by 30%.
Oh, much
I
better.
like to say we had a good year in the first 6 months of 2022.
How do you do that when markets are down like 35% in the NASDAQ?
Well, I mean, it's a little bit of luck. I mean, we had business in process that was closing with some larger transactions that closed. But I mean, what happens is you get bigger, is that you're able to compete for bigger business, and you pull together a virtual team of really terrific folks, and they bet on the jockeys, as much as the horse, and so we've seen coming through our business review committee, commitment committee, a number of larger transactions that historically might have gone to a much bigger, more established firm.
Sounds exciting. And you're in 4 provinces in Canada.
I think 3. I have to go check the number, but I think it's 3. We're up in Ontario, I know, and
how many independent contractors would you have registered with your organization in Canada? Any idea?
Well, right now it's mostly people that are like needing to be registered in the United States because they want to solicit and they need to be supervised, for under FINRA, Financial Regulatory Authority rules in the United States, and so. We've done a little bit of institutional distribution. It's a handful of people, not very large yet. I mean, honestly, we've done it more as an accommodation so far, Brian, and there's a little bit of complexity management associated with it, and we have plans to be in a bunch of countries in a bigger way, but with a bigger, broader registration, so to speak. But we want to do it, when we think we can handle the complexity management that assume. So, for example, I mean, we'd like to be in the UAE at some point. There's a lot of interest in cross-border transactions. The Abraham Accords with Israel. I think that we obviously want to build out a bigger post in Canada. It's right across the border, and we've got people doing mining, and obviously it's one of the most important mining centers in the world. We want to go, we need to be in Europe, but that one's been made more complicated by Brexit. I mean, it used to be that automatically you'd go into London. We may need to go into London and go somewhere on the continent. We'll see, Luxembourg, for example, but we've got to figure that out. But each one of those things requires a different registration and a different layer of cost. And so we got to make sure that we're big enough and we're organized at the point that we enter into one of those markets to get real synergy with what we're doing in the U.S. I mean, the good news is the U.S. is the world's largest capital market, and lots of foreign companies want to come to the U.S. So having this capability in the U.S. also attracts a certain number of foreign clients.
Now, why do you think you became sort of the subject of this cover story about the world's first major decentralized investment bank? Do you think this is a trend that other people will follow? Is it unique selling proposition? Is it a sign of the times? Tell me about that.
Well, I think that, I don't think that there's anybody in the space that ran a top 10 U.S. investment bank years ago and came up, large firm equity capital markets. And so I think that's trying to do this. I think there are guys that, that have decided to set up businesses that were lifestyle. They do elements of what we're doing, but maybe they haven't thought about it from the standpoint of scale. And I think that's the difference with us. I mean, we're focused on developing scale and efficiencies. I mean, we're actually just we just hired the first one of our first employee offshore in a lower cost jurisdiction to try and create some economic leverage. And so these are some of the things that ultimately, hopefully, will inure to the benefit of the bankers working on our platform. That we'll be able to create sort of specialized offshore capabilities, but that you can only do that when you're getting larger.
David Weild of Weild and Company, one of the most fastest growing investment banks, decentralized investment banks, subject of a major cover story just this past month. Thanks for telling us a little bit about your company. We're going to ask you a little bit more about that, about the Jobs Act. We're going to ask you about crowdfunding. We're going to ask you about current state of the markets just after a break, 2 minutes. Everyone stay with us. We'll be right back with David Weild. Welcome back, everyone, to the Brian Crombie Radio Hour on Saga 960. I've welcomed back to the show David Weild, who runs a company, an investment bank in the United States called Weild and Company. They recently got an award, a cover story, for being the most diversified investment bank and one of the fastest growing in the Inc. 5000. Fascinating different business model in the investment banking business. But David, you sort of got your reputation based on both your operation of a major investment bank, but also that you were critical at that time in instituting the Jobs Act and crowdfunding the Jobs Act. Tell me a little bit about how that changed raising money in the United States.
Well, I back up and I'd say, look, I was vice chairman of NASDAQ, and I think that gave me a certain amount of credibility in with Congress. I mean, I probably didn't appreciate it at the time, but when I was vice chairman, I ran the listings businesses for NASDAQ globally, had followed my mentor, who was the CEO of Prudential Securities, Wick Simmons, when he became chairman and CEO of NASDAQ, and worked with Adina Friedman as a contemporary when I was there. She's now the CEO of NASDAQ. My job allowed me to meet Steve Jobs. I spent a lot of time talking to Steve Jobs. I think one of the, in hindsight, one of the more interesting experiences was he called me up and threatened to take his listing over to the New York Stock Exchange if we didn't, when he found out that we were standardized on Dell laptops, if we didn't move over to the Mac. And I had to explain to him that the Mac did not integrate with the BlackBerry at the time, and we love the Mac. We use it in our graphics department, but it didn't work for people that were out in the field, and so he found that interesting. And then for every month, once a month for the next couple of years at least, he would pick my brain about how people were using the BlackBerry. And now, with the blinding light of hindsight, I realized that he was designing the iPhone at the time, because this was before the iPhone was launched. But Tom Stemberg chaired my Issuer Affairs Committee, and he was the founder of Home Depot. Met Steve Ballmer a number of times when he was running Microsoft. Craig Barrett, who ran Intel, and so it was a heady place to be, and I loved it. I mean, I felt like I was doing something that was really contributing to the U.S. economy. Yeah. And so when I left NASDAQ, I lived through that period of, I call affectionately, the bubble rubble, when the .com bubble had corrected and had the sort of the distinction of having to keep the regulators from delisting lots of NASDAQ listed companies during a recessionary corrective period. So I didn't think that was in the best interest of the country. And if you broke the buck, the dollar line, and there were a lot of short sellers that were pushing these stocks below that level, you had the risk of delisting lots of smaller companies that needed to keep the lights on. And so I started working with the general counsel's office and with the SEC, and we got a moratorium in place, and we were able to save a lot of companies until the market rebounded. The SEC was absolutely terrific, and so I think that experience with regulators, and Mary Shapiro subsequently became the SEC chair at the time, was an EVP at the NASD, which became FINRA. Rick Ketchum was my partner. He had been a former head of the Division of Corporation Finance at the SEC, and subsequently became the CEO of FINRA, and they were my partners, so I got to understand, I think the way few people from Wall Street do, what the concerns of regulators are, how political their job can be, and so I think it equipped me to navigate Washington, and also to have a little bit more credibility than the average person. And so then I started to work on capital formation and its impact on innovation, job creation, upward mobility, wrote a series of papers, and those papers got picked up on Capitol Hill, picked up across the world. I wrote one for the Organization of Economic Cooperation and Development, which is the sort of like the United Nations of free market economies, headquartered in Paris, called Making Stock Markets Work to Support Economic Growth. We did a comparative analysis of 26 IPO markets, including Canada and the United States, and was one of the most widely read papers, and by academicians and policymakers, and so the work that we did, sort of led to a rethinking of some of these access to capital issues. One of the things I'm most proud of is that we made it easy for people who are poor through general solicitation, crowdfunding, and similar enhancements to finally raise capital, which is, if you're, most businesses are started with capital from friends and family. And if you can't solicit people that are accredited investors or other investors, then you're effectively doomed to not get a business started. And so I'm really proud of the fact that for particularly people of color in inner cities, that were, from poor neighborhoods and things, that if they have the moxie and they have the wisdom, that now they have the toolkit to actually have a shot at raising capital. We got a lot more work to do in that area, but I think that's been, for many people, transformative, judging from the number of people that have gone out of their way to say thank you.
So tell me, what exactly was the improvement, the advancement that you passed in the Jobs Act?
Well, there were a number. I mean, first of all, the Jobs Act is an omnibus bill. There were 7 different titles of the Jobs Act. The first 6 were really the ones that mattered. The 7th was tacked on, which said that that the SEC had to market it to women and minorities and the like. But the first 6 included things like Reg CF crowdfunding. It included the emerging growth company designation for IPOs, which essentially made it less costly for people to get public. It allowed them to essentially suspend some of the more costly provisions for the first 5 years of their public company life. It also, included testing the water. So there for a long time, you could not talk to investors. You had a blackout period for 6 months before you went public, and we got rid of that. And the reason why that was important is now we could go all of a sudden and solicit crossover buyers, including Fidelity and T. Rowe Price, to come in to do due diligence. But in life sciences, the more vertically integrated life sciences accounts like OrbiMed and Deerfield, that would then show up on a cap table and credentialize the company before they went public. So people now knew that somebody had actually done real intellectual property due diligence on that company and had given them their imprimatur, their good housekeeping seal of approval. Because up until that point, if you went public, what would happen is, you'd basically get a one hour meeting on an IPO roadshow to kick the tires. And of course, in a heavy IP company that's pre-revenue, which is the entire life sciences market, going into phase 3 clinicals, that just doesn't work. And so, I think I famously said to Meredith Cross, who was, I was speaking at the SEC, and she asked me about testing the waters for, IPOs, and or that practice of basically putting everybody under the cone of silence for 6 months before they went public. And what did I think about it? And I said something to the effect of, I think you should be working for the Chinese, because you've really created a competitive disability for the country. I mean, at the time that's most important for people to get out and kick tires, you've essentially caused people not to be able to say anything and communicate.
So what's the other side of the argument? Why do they have that? Why did they have that 6 month quiet period?
Honestly, Brian, I sometimes think that, that what was the blessing, the great blessing, was that I was vice chairman of NASDAQ. So people will automatically assume that I'm, sort of part of the establishment, and that I'm not a crazy person. And I've got a lot of useful experience, but I really feel sometimes like I'm the little boy in the emperor's new clothes. And that some of this stuff, which should be obvious to people for whatever reason, hasn't been questioned. It's been sort of legacy, and then people don't know why it's there sometimes. And it was the same thing with the repeal of the prohibition against general solicitation. I said famously to folks, why do we care who we talk to? Why don't we just care about who we actually ticket the stock with, sell the stock to? I mean, it just seems so apparent. Why do we care? Why do we care if somebody takes a billboard out in the middle of Times Square about an offering, for that matter, as long as it's factually correct and people are given adequate information. But if you're dealing with accredited investors who allegedly are sophisticated and everything, does it matter that I talk to somebody who doesn't have a high net worth? I mean, maybe they'd like to hear about it and learn something. And so I think that people realized that there was a lot of just common sense in what we had to say. And I think I think lawyers many times, they worship at the twin tablets of the 33 Act and the 34 Act, and maybe the third tablet, which is the 40 Act, the Investment Company Act of 1940. And as a guy who built businesses, I sort of have always asked the question on Wall Street. I've always asked the question, how can we do it better? And, why is this here? And can we get it to change? And so, right. I mean, this was one of the things that happened during COVID. I mean, we have a regulatory structure that really doesn't, in the United States, doesn't contemplate hyper decentralized models and people working from home. And we have a lot of structural impediments to women staying in the workforce and to, accommodating minorities that want to work in the middle of downtown, in the middle of an impoverished area that may have the experience of being able to curate a transaction and act as an investment banker, but need a sales force to raise the capital. And so I think that we've unwittingly, through many of these structural impediments, inhibited capital from getting to places that need that capital that would actually do us a lot of good, create a lot of upward mobility, job growth, net worth, and ultimately integration and assimilation that I think is so important to creating a more perfect union. So, I think we're scratching at the surface of the things that we can do on the public policy side. We're going to come back off of this platform. I mean, I've got, with now supporting job growth directly in 24 states in the United States. I think that's a great platform to start getting back and working on thought leadership pieces and getting into Congress and rolling up our sleeves and doing some things that'll make the United States and hopefully Canada, much more competitive over the long run, because we have bigger adversaries. And if we don't, get better and they're bigger, we're not going to enjoy the outcome, and our kids are not going to enjoy the outcome. And so, for me, I want to leave it all on the field of life, and want to make sure that we're the best that we can be, and that our kids have every opportunity that we had to succeed and to stay free and to enjoy the fruits of a strong national defense that needs to be funded and needs to leverage off of strong innovation and technological leadership. I mean, these things are absolutely critical.
You have a strong public policy bent, even though you're a Wall Street investment banker. Is that unusual?
Yeah, it's very unusual, but what drove me to Wall Street was very unusual too. My dad is a Yale intellectual properties, lawyer, and we used to have debates at the dinner table about it. I was actually a molecular geneticist by training. I started a doctorate, and then I saw Genentech go public in 1980, and the stock gapped open from 30 and closed upwards of $80 a share, and I was just, oh my God, look at that! Capital can be used to fund, transformative innovation, revolutionary changes that will do great good to society. So what drove me to Wall Street and had me shift and go do an MBA instead was just seeing money run after technological innovation. And I sort of said, boy, I would like to, work potentially in venture capital or things like that, where we were actually doing things that might have great social impact. So I got to Wall Street a social impact interest, which I think is fairly rare as opposed to just how can I make money interest.
The Job Act was passed by Obama. Is that not correct?
Yeah, it was signed into law April 5th of 2012, and I was there in the Rose Garden, and it was a beautiful sunny day.
Most people wouldn't think of Obama as someone that would be overly interested in capital markets, economics, et cetera. How were you able to persuade that administration to pass this?
I think it was a little bit of serendipity. I mean, it was actually a Republican drafted bill, and in the U.S. House of Representatives, and then a couple of Democrats, one who was senator, subsequently became he was a U.S. senator at the time, Senator Ted Kaufman, who had been the chief of staff for years and years for President Biden. I got in front of with his chief of staff, Jeff Connaughton, and he completely got it. I mean, Ted is a really bright guy, big public servant. He's retired now, but I showed him the charts that we had showing the drop off in the small IPO and the loss of publicly listed companies. And Ted is a Wharton graduate, went to Duke undergraduate and Wharton for his MBA, and he started giving speeches. But his chief of staff, Jeff Connaughton, walked me into the U.S. Office of Science and Technology Policy, which is part of the White House conglomerate, the executive branch, and sat me in front of the number two in that office. And then somebody who was in the room was Tom Khalil. And then somebody who was in the room turned out was a special advisor to President Obama. And I guess we broke through. And then what I heard through the grapevine is that President Obama put two lobbyists on the Senate Democrats. And the next thing you know, instead of usually what happens is you have a whole new bill that's in drafting form in the Senate, and there was nothing in the Senate. So they took the House bill, they made a couple of changes on it, they sent it back to the House for an up or down vote, and the next thing you knew, it was on the president's desk and signed into law. And that's how it happened. But I mean, the president wanted the bill. Obama wanted the bill. And I think that, and I never spoke to President Obama about it, but I think that they understood that it was going to help lots of people that were entrepreneurial in spirit raise capital that heretofore hadn't. And very interestingly, when after it was passed into law, I spent a lot of my time actually speaking in front of the Black community. And so it was very clear that they had been effectively, the poor Black community in the country had effectively been deprived of access to capital, and that this was giving them a toolkit to actually, change the way the game was played. So I spoke at the National Black Chamber of Commerce. I went to the White House for the I Have a Dream Summit. I spoke at Rodney Sampson's, he wrote the book Kingonomics, at his Kingonomics conferences. I spoke for Jesse Jackson at the Rainbow Push Coalition, because there was such a thirst for understanding how these tools could be used to get businesses started in the African American community.
Fantastic. Congratulations. That sounds really, really quite transformative. We're going to take a break for some messages and then come back more with David Weild of Weild & Co., a diversified investment bank in the United States, who's had a real impact on raising capital in the United States, and talk a little bit about venture capital, raising capital in the United States, but also in Canada, and how market turmoil recently has impacted it. Stay with us, everybody. Welcome back, everyone, to the Brian Crombie Radio Hour on Saga 960. We're talking about financial markets, particularly financial markets for smaller companies. And my guest is David Weild of Weild and Company. It's a decentralized investment bank. I apologize, I said diversified. It's a decentralized investment bank where he has a model that really independent contractors from different states in the United States and different countries, including Canada, become investment bankers under his organization's auspices umbrella. But David, what we were talking about was raising money for startup companies. And I wonder if you could just tell me a little bit about what you think is happening in the market. So venture capital funding, I understand, is down dramatically in 2022 versus 2021. And 2021 was a big year for raising venture capital money. SPACs, which I think some people thought were copies of the Canadian CPC model, which is sort of public venture capital, raised an incredible amount of money over the last couple of years. And from what I understand, a lot of them are sitting still with the cash, and they've got a time frame to make acquisitions, to do RTOs, reverse takeovers with that cash, and haven't been able to do it. And a lot of the companies that actually did transactions last year are now trading below what the cash raised was. The NASDAQ that you used to be vice chair of is down something like 35% since last year. The regular stock market is down some 20x%. Some people think that the typical bear market is in the 30s, and so therefore there might be another 10 or 15% to go with the NYSE and the major markets. Tell me, is it challenging raising money for startup companies today?
Well, maybe for startup companies, I think we're not dealing with startup companies as much as we are focused on companies that are doing A and B and C rounds. There has been there is an adjustment going on. There always is with in reflecting the decrease in prices and value, the valuations in public markets, and so I think you're seeing valuations come in private markets. I think that a lot of venture capitalists, for instance, have a lot of cash. And there have been some big funds, and that money's got to be put to work. But I think that, they're biding their time a little bit and watching the valuations. There's a set of expectations on valuations by entrepreneurs that, was set by higher market valuations. And it takes a while before, reality sort of sets in and the valuations get adjusted. And, but I think that there's still going to be a lot of money put to work, and we're closing a lot of business at Weild & Co. But I think that ABC round, kind of area is a little bit less sensitive. The M&A is business a little bit less sensitive in private markets, and I think most people think that if we have a recession, or if we are in a recession already, that it's going to be a moderate recession. I think most people think that when these public markets correct, if you go back over the last 20 years, these bear markets have been shorter in duration than they were historically. So my guess is that we rearrange the deck chairs a bit and we get back to business. There are a couple of things that we need to work through in these economies that we'll be working through for a long period of time. And look, it's not just Weild & Co. that's decentralizing. There's a lot of people that moved. There's a great migration that went on because of COVID. There's a lot of technology that's enabling people to work remotely. You're seeing people, setting up manufacturing plants in places that are off the traditional water utility grid. And putting in place, so you're seeing decentralized water purification kinds of technologies start to kind of come into their own, and decentralized energy generation, electricity generation. So I think that what we're kind of experiencing is maybe more impactful to how economies are set up than even maybe the Industrial Revolution was. And
really?
It's a massive decentralization change, and I'm not saying that it's going to change, productivity and output, and it will do that too. I'm not smart enough maybe to know exactly how, but it is definitely going to rearrange the deck chairs, where people live and how they consume, resources in very, very profound ways. Cities.
So this decentralization that, this work from home that took place during COVID, you think is a trend that will continue?
Is permanent. It doesn't mean that you aren't going to have people flowing back into cities. There are some things that, people, can only do face to face. Procreate is one of them, right?
The CEO of Goldman Sachs or Morgan Stanley that say you got to be in the office 40 hours a week if you want to get paid.
And they got an incredibly powerful brand, and people, and they are the exception rather than the rule. The rest of the world is going to have to figure out how to accommodate people if they want to keep people. And but you also have people that are sitting there saying, God, I can go to, I can buy real estate on the cheap. And, I can set up a plant because more and more people are coming up with more and more technologies to support that kind of hermetically sealed manufacturing facility with water purification, with electricity generation, et cetera, et cetera. And so you're going to see fundamental change. You got people that want to live different places. I mean, I talk to law firms in New York, and yeah, they want people back into the office because they think that there needs to be some face-to-face mentorship of young associates, but they're saying maybe 3 days a week, not 5 days a week. Well, all of a sudden now, that means that you've got 4 days a week where, your primary residence is somewhere other than Manhattan. And so a lot of these people are staying out of their country homes. And so the world's changed. I mean, and it's not changing back. That genie's out of the bottle. And then the question is, so much investment has been made into some of these technologies that it's just going to get better and better to be remote. I mean, I'm talking to companies that are doing, logistics software to be able to run, jets from local, from remote markets more cost effectively because time is money, and they understand that, big corporations are going to have to not just go to major primary, airports, or secondary airports, but probably tertiary airports. I mean, this is the discussion that's going on. And so when people start thinking that way, then the accoutrements to handle that kind of remote work only improve, and they get stronger and stronger. I mean, think about the metaverse, right? You're going to be able to put a headset on, and you're going to be able to be effectively in the office and walk around the office and do whatever you need to do, but do it virtually. That's what's going to happen. So why do you need to be in the office? Honestly, you'll get an experience which becomes closer and closer to being to being in person. And so I think that people underestimate what just happened. I think that it is. I think that. JP Morgan and Goldman Sachs, because they are JP Morgan and Goldman Sachs, or Morgan Stanley can pound the drum and get people back into the office, because those are exceptional organizations with exceptional brands where people make, exceptional amounts of money, and they're willing to put up with the wear and tear to have that opportunity. Certainly young people, because, that's part of being mentored and trained in the apprenticeship program that is, Wall Street. But for the rest of the world that are making lifestyle choices, you want your kids, brought up on a ranch, you're going to be able to be in financial services and bring your kids up on a ranch. You need to tend to an aging parent that's in the middle of of a depressed area of Baltimore, and you worked at Morgan Stanley. You may just leave Morgan Stanley to go work for Weild and Co. and work in the inner city and take care of that aging parent. That's what's going on, and that's what will continue to go on. It's a complete tsunami.
Fascinating. Let me ask you a little bit about Canada, if I could. A lot of people think that if you're in the mining or oil and gas business, you can raise money in Canada, but that it's challenging in technology and life sciences in a lot of other areas, and that you might be able to get money in an IPO, but a lot of companies, when they need the big bucks, have got to go to NASDAQ or New York. If you were advising the Canadian government, what suggestions might you have for what we need to do in Canada to improve our capital markets?
Well, I think the ability to kind of do things cross border, and look, we embrace Canada with Regulation A plus. I mean, if you read the statute from the Jobs Act, the title, you'll see that Canada was included. You know, other foreign countries are not. You know, I think that you know, companies and entrepreneurs need to get to where the capital is, and they need to go to where the experts in their industries are. And if there are big pools of experts in the United States, you know, you'd like to remove the friction for, you know, with the U.S. government and for people to come into the United States, and vice versa, which is to say that, you know, it should be made very easy for U.S. entrepreneurs in mining, for example, and natural resources and so on to go into Canada, where people really have the expertise and understand the business. That would be my look. You know, you're not going to fight the fact that I think in the United States, I was looking at something, and maybe not since the correction, but the actual equity market value was last year $80-90 trillion, and it's a staggering amount of money. And so, you know, for me, what I've spent a good part of my last 15-20 years trying to figure out is how do you take some of that massive large cap wealth and just tip some of it into earlier stage companies to set off tsunami, a tidal wave of innovation and growth, job formation, and I think that is kind of what we're all thinking about. And what you're doing is you're trying to take down the obstacles. But I would also say that one of the challenges with these microcap markets is, you know, that the classic electronic penny tick size increment market is, you know, does not work for microcap companies, small cap companies. That you need to have actual adequate commissions for brokers or intermediaries and salespeople to get on the phone. And because those markets don't trade innately by themselves, they're not liquid by themselves. They need storytellers. They need people getting, you know, on the phone, doing equity research. And so, you know, higher spreads, telephone quoted spreads, bringing institutions in, that market structure is so important. And so this one size fits all market that we went to in the United States with low cost trading and electronic trading is absolutely an impediment to small companies going public and being properly supported and enjoying a reasonable cost of capital. It's one of the reasons why we actually got very close in the Trump administration to a new act. It was called the Main Street the Main Street Growth Act with Congressman Emmer, that was then embedded in the Jobs and Investor Confidence Act of 2018, that would have come up with it, would have introduced an entirely new public market structure for smaller capitalization companies. And that's what's needed. You know, this notion that what works for innately liquid large cap Fortune 500 companies, you know, and is very has very low transactional costs. It is, you know, what people don't understand is that because you've got a network effect with tens of thousands of investors looking at Microsoft any minute of any day, or Intel, or Exxon Mobil, that when you get into microcap markets and they're so efficient, what you do is you just obliterate the intermediaries that are needed to find, you know, buyers to offset sellers and sellers to offset buyers. And so you know, there's been a lot of one size fits all market creation throughout the globe, which has actually undermined the whole growth community. And because if you can't get the companies public and supported earlier on with real institutional capital, then what happens is you're making it harder for people to get exits from making investments in private companies. What does that do? That creates a negative feedback loop, and now you have less access to capital for smaller companies. And so these things are all related, and you know, we just need to have public market structures for smaller capitalization companies that are optimized for the needs of those companies and the needs of the investors, and particularly the institutional investors in those companies. And then if we do that and lower the bar to going public, I think that you'll see lots of money flow into ultimately startups, and you'll see a renaissance in technology innovation and breakthroughs. And by the way, this stuff's important. I don't know if I told you that the Biotechnology Industry Organization in the United States, invited me to do a fireside chat in their conference in the early part of this year for the 10th anniversary of the Jobs Act. And they pointed out to me that the Jobs Act had tripled the number of IPOs in the life sciences industry, and they credited for, in the first 5 years of the Jobs Act, causing 18 new drugs to be approved by the Food and Drug Administration. And I ran into Lawrence Kim, who was the CFO of Moderna, at a victory lap celebration down in Washington. And Lawrence said that the Jobs Act enabled Moderna to raise capital. That turned into the most effective COVID vaccine in the world. So I think that, that people underestimate, the power of getting market structure right and the importance of it to, the future of our societies and our children. And so that's why I get so excited about this stuff, because I think that it's if you want to accelerate and amplify social impact and the ability to defend our countries, all the things that we hold dear, that you have to get these markets right.
David Weild, I agree. Thank you so much. We're going to take a final break for some final messages and be back with David with some concluding comments in just 2 minutes. Stay with us, everybody. Welcome back, everyone, to the Brian Crombie Radio Hour on Saga 960. We've been chatting tonight with David Weild of Weild & Company. It's a decentralized investment bank, and he's got really quite a fascinating model, and he's been the subject of a cover story in a financial magazine recently, talking about how it's one of the fastest growing companies, and it really has been quite successful of late. And David says that his business in the first 6 months of 2022 is up over 30% over the full year of 2021. Pretty spectacular. So you said that you've got a little bit of business in Canada. How do I join if I want to join?
Well, I think that people that are registered or, need to be registered, want to transact, particularly in the United States right now. I mean, even out of Canada, reach out to me. I'm on LinkedIn. It's David Weild, Weild the fourth. And where you can email me at david.weild@weildco.com. I make an appeal, when we get major legislation passed and work with regulators, it helps having big alliances. And so, when we did the Jobs Act, we had Silicon Valley Bank and the National Venture Capital Association, working with us. I mean, folks that represent major trade organizations and the like, life sciences, biotechnology industry organization. I mean, we want everybody that I think would be well received in Washington to associate. We're even talking to some major churches. And so, reach out and let's engage in a conversation. Maybe get on our mailing list. Let's make sure that we broadcast from the mountaintops, so that every politician, policymaker, and regulator can understand the importance of the kinds of changes that we're trying to drive for the future of the next generation.
David Weild, thank you so much for joining us. If I could end with a couple of my own thoughts on this. I've spent most of my career raising money. I've raised money in the biotech business and technology business and real estate, in beer and entertainment, and a couple of other areas. I've done it in the United States, in debt markets and equity markets, in Canada in debt markets and equity markets, and I've done it in private markets. And I do think that we in Canada have a challenge. I don't think that it is nearly as easy as it could and should be to raise money, particularly for maybe not small companies, but medium-sized companies. And when you get large, regrettably, you almost got to go to the United States, and the volumes are such, the markets are such, the expertise is such that if you're not in the oil and gas or mining business, you end up, as I did, spending way too much time in San Francisco and New York and Boston, going to talk to institutional investors. I do think there are some things that we need to address in Canada, and maybe I'm going to have to find the David Weild of Canada and talk to him or her about what we can do to improve the markets in Canada, make it easier to raise money for those startup companies, but also those medium-sized companies that need to go public, because it is becoming more challenging, and a lot of the same challenges that David talked about for medium-sized companies in the United States exist in Canada as well. Anyway, David, thank you so much for joining us, and congratulations on your success. I look forward to following your successes in the future.
Thank you, Brian. Nice to see you again. That's
our show for tonight, everybody. I'm on every Monday through Friday at 6 o'clock on 960 AM. You can stream me online, even from New York, sir, at www.saga960am.ca. Good night, everybody.